Hello, everybody. Thank you all for being here. Hope the audio is working. Somebody shout at me if it's not, because you never know. Live TV, big danger of it. Now, I just want to touch base. It is working. Good. And one of the things about me that you probably know is I don't like making mistakes. And one of the things that made me successful, I think, in my life is I do everything possible to make sure I don't make the same mistake twice. And the last 14 or 15 months, I spent a lot of time, I think it's called self-flagellation, where you whip yourself and analyzing all of the same mistakes. Now I will share with you here not only the mistakes, everything raw and open, but show you exactly what we can do to make sure it doesn't happen again. Now, over the last week or so, I got 3 requests from Patreon. One is give us an update on Retire on Crypto. That's what this will be. Number 2, make another Retire on Crypto portfolio, but starting today. I will only do that if I get 2,000 likes in this video. And number 3, how can we take profits better? That is the key thing. And how does the slider work? We'll find out about the slider later anyway, but that's a separate thing. People are confused about it. So let's jump into the Retire on Crypto portfolio. We are 605 days later precisely. And the market is up and down, but still showing good signs of life. Broke through 25K again today on Bitcoin, which is nice. And this is not financial advice, it's edutainment. Now, quick warning for everybody. We always say, edutainment, not financial advice, do your own research. I give you the tools by which you can do all that. And the methodologies I use, which I'm not perfect. Nobody has a crystal ball. Nobody can predict crap that happened in 2022. The cascading liquidations, all triggered by 3AC, reverberated through the whole system. And the whole cryptoverse is a cleaner, safer space. It's not impure, but it's a lot cleaner than it was at the beginning of January 2022. Also, the beauty of this as well, every single trade you can check in the video here that I did on the 22nd of June, 2021. My first ever Retire on Crypto video. So let's jump in. By the way, only invest in crypto what you can afford to lose. It is very risky, but it's also very asymmetric in terms of performance, both up and down. It cuts both ways. So the quick reminder of exactly what I did on the 22nd of June, 2021. I purchased 10 names, but different allocations based on risk and performance with a couple of flyers. So the big lesson, is basically, I'll go through the allocations, but it was $50,000 portfolio, heavy Bitcoin and ETH. Third biggest position was Chainlink. What a mistake that was. We'll talk more about that and my theories around that too as well. And I always say, keep your tap dancing shoes. We had AAVE. I was always a fond user of AAVE in the past. I thought it would be a good token. Solana, I felt would be the ETH killer back in April 2021 and added it to this portfolio, but not enough. Uniswap, again, I pick things that I kind of like to use. Polkadot, because people said the technology was amazing. Cardano, because it has such a strong army. Polygon, because it is the best layer 2. And always came up number 3 on our SCP profiler. It came Ethereum first, Solana second, MATIC third. So MATIC had to go in there. And Algorand, because a lot of people in New York especially told me, you got to get some algo. It's really good. But back then, I didn't do enough diligence on algo. I just stuck about $500 on it. So 1% of the portfolio. And again, even if you're just losing 1%, it is painful to make those mistakes. So let's jump in. Now, one of the things I did share as well, this is what I call the risk return curve. You've heard me 1,000 times saying the further you go out on the risk curve, the higher the return, but also the higher the risk. So this was kind of my lay of the land back in June 2021. It's hard to believe it's only 2 years ago. And I always said as well, remember, number 1 focus is preserve capital. Number 2 is to grow it. Once certain targets was always my plan, would hit certain levels, I would get out. But I wasn't as disciplined around that as I would like to have been. My plan was to sell things at certain levels and move to stablecoins. By the time I started that process, it was September 2022. I started doing the Layer Out series. Should I sell is what we call it. I was too late. I should have done that like 3-4 months earlier, 6 months earlier. Anyway, enough of that. So let's look at what this risk curve looks like today. First of all, I was right about 4 of the top 5. Again, I felt Solana was number 2 after Bitcoin because of the upside. Ethereum was number 3. They all kind of held up together. We'll dig into the results of those 600 days later. Chainlink, number 4. I thought that was like parking money in Bitcoin. I thought that would be super safe. It was not. Polygon, I thought, yeah, layer 2. I prefer layer 1s, but we'll throw some layer 2 in there. And the rest really did crap. I thought they were further up the risk curve, but their performance was actually very, very high risk. So that was kind of right, but I had X's because they didn't do very well. We'll talk about that too. This was the portfolio allocation, June 22nd, 2021. Bitcoin and ETH, I think, was 82% in total, and 18% was allocated to 8 other names. You can see all these numbers, 8s, 8s, 8s. I kind of like patterns, but there's also a science behind the allocations. The other names all average, between whatever 4% and 1%. But the plan was to switch things out. Now, this is interesting, and I'm not casting any aspersions on anybody here, but these are all the thumbnails in June 2021. People thought it was the end of the world, and fear sells. So I understand why people have a lot of fearful thumbnails. And we've seen them ever since. But this was June 2021. Crypto market crash. Time to cash out. Move to cash. Death cross info. This is another set. Sell everything. Crypto crash. Death of Cardano. Huge crash incoming. People steal Shamas' face and stick it on thumbnails all the time. That one floats around everywhere. The Bitcoin crash is closer than you expect. Again, this is June 2021. And yes, things did happen. But remember, after 22nd of June 2021, what happened? Market went bonkers. After all the FUD in June and July, market rallied hard, hitting new all-time highs. So again, I analyze everything that we've lived through for the past 600 days and try identify patterns, because we're seeing a lot of that stuff today. Now, let's talk about where we are today. And these are numbers. The numbers don't lie. So first of all, this is the allocation today. And I know more. I think Bitcoin was about $100 higher when I did this, so it might be slightly off. But you can see the allocation is now 55.6% Bitcoin, 31.4% ETH. Link is down to 2%, and remember, it was a big heavy lot at the beginning. Sol is nearly 4%. Imagine, and this is assuming we had held everything due to certain circumstances. For example, a lot of these altcoins I actually held on Voyager, but because of the FUD, we had to dump them very quick and did not replace them. And so a lot of them are gone. I did add MATIC at 80 cents about 6 weeks ago, I think it was, and that's done very well since. And there's been a lot of other activities, and I've been layering in hard to what I believe is the winner for the cycle, and I pretty much haven't bought ETH since. In nearly 2 years, but I have been swapping ETH for other names to go forward. So that's kind of the allocation today. Let's look at a rough chart. And again, it's hard to scroll to the exact position to get the exact percentage. But what happened since June 2022? Well, look at those lines. You can see one name went on a huge rampage, which caused people a lot of pain, caused people a lot of FOMO, and that is Solana. But you can see Solana is pretty much flat since that time. But Ethereum is down about 4%. It's actually up because it's hard to grab the slider. But just to show you the charts of how things have performed, MATIC is red at the bottom there. It's gone on a rampage. But Bitcoin is down 17% since June 22nd, 2021. Polkadot, 33%, Link, 45%, Uniswap, 53%, AAVE, 61%, Cardano, 61%. So it's been kind of a rough bear market. But it's important to look at what was stable. I thought the stablest, safest of asset would have been Bitcoin. As it turns out, it wasn't. Now let's look at the DAPT. This is the Digital Asset Portfolio Tracker that we make available to Patreon members. And here I plugged in everything. I track all my portfolios and different things, and I use this tool to do that and see exactly what's going on. But digging into this, you can see the portfolio is down. That's an incorrect percentage. It's not down 29.8%. It's down exactly, let me pull it up here, 15.8%. The portfolio today has lost $7,900 from the initial $50,000 that was invested. The number you saw there is the average loss per token, 29.82%, not the portfolio down. So error on the slide. Sorry about that. And ranking gainers to losers, you can see the best performer over the last 600 days was Polygon, up exactly 42.35%. Solana, 6.54%. Ethereum down 1.49%. And remember, the market's been so volatile today, so the percentages change from the TradingView slide to this slide. But this was taken a snapshot about 30 minutes ago. And then Bitcoin down 15.4%. And then it starts getting kind of ugly. Polkadot down 47%. AAVE 51%. Uniswap 55%. Chainlink 55%. Cardano 59%. So it obviously pumped up a little bit in the last few minutes. And Algorand 62% down. So Algo is kind of the dog of them all over the last 2 years. Now, what happened? Let's analyze. The bear market started in earnest, you could argue, plus or minus a couple of weeks, months, whatever, but April 2022, when things started to slide. There started to be smoke. 3AC happened, which triggered Luna to happen, which triggered Celsius to happen, which down the line, FTX, etc. Just complete crap year, and not only for crypto, but also for equity and bond markets, worst ever in 50 years. Now, these are the performance over the last 605 days of all of the assets. You can see the blue is the original investment, and the red is where we are today. You can see Bitcoin lost approximately $3,000 or $4,000 from the initial investment, but that was a huge percentage of the bag. Remember, Bitcoin and ETH at the beginning were 82%, and you can see ETH lost about $100. Chainlink lost more than half, stunning. Solana's up, but very slightly, only $100 exactly on the nose. But remember, it was only $1,500 in there initially, and it was just a test portfolio. We're just looking at that point in time. AAVE halved, Uniswap more than halved, Polkadot more halved, MATIC up 50%, Cardano down, what is that, nearly 65, 67%, and Algorand down huge as well. So that's kind of where the numbers stand right now. And the allocation today is, again, 55% exactly Bitcoin, 27% Ethereum. Oh, hang on. Well, that's the old allocation. Sorry, that slide is out of order. Forget that one. Sorry, there's a lot of slides here. But this is the old allocation represented here. It's just a duplicate slide I covered earlier. Now let's look at one ratio I like to look at too. This is the percentage from all-time high and percentage to all-time high. This is kind of another model we're working on to identify cool investments like the graph, which we plugged back in November 2022 because it looked like it had a lot of upside. And boy, has it done well. Now, if you see here, looking at the left is the blue. That's the percentage from all-time high. You can see the bear market has been rough. The best performer in terms of the asset that is closest to the all-time high, it's only 48% away, is Polygon MATIC. So big round of applause. I can't believe how resilient that thing has been despite everything else that's happening. A lot of names are still down 60, 65%, and some north of 75%, including Solana, etc. But remember, we all know why Solana went so high. It's because it was being artificially pumped by Alameda on behalf of FTX, the scam operation, which tricked everybody. Me, heads of government in the United States, top investors in the world like BlackRock, they tricked everybody. So let's not dwell on that. Let's look at the percentage to all-time high. You can see Algorand has a huge percentage to go back to all-time high. And sometimes, using the new thing we're working on, sometimes it looks like it may not actually get there. Solana is 1,000%, 1,100% getting back to all-time high. AAVE, about 600%, etc., etc. You can pick it up. Cardano, back to all-time high, is another 600, 700% as well. So things are very, very different from where they were. Now let's talk about one of the things that we built to make sure we would have a scientific mathematic discipline to be able to get out of crypto and take profits to protect our portfolios. And we built what's called, this is what I call Learning 11 from the bear market. It's the layer out model to determine scientific mathematical layers that take us up. So the question came in is, how would this model have performed back when this portfolio was made, pre-bear market? And that was a very interesting thing. In fact, I can run all the exact numbers for this to show you the HODL versus the layer out on steroids, profit-taking model, whatever you want to call it, as we go forward. So first of all, let's look at the layers that this model came up with on the 22nd of June, 2021. And you can see here some of the key layers. It's kind of uncanny where it's gone to, but I'm having a hard time seeing these layers. The first one is about 40K. And remember, these layers typically are chosen to be levels of support or resistance based on a whole bunch of different factors. We look at ratios, volatility, trends, and everything else to find out exactly where we go at that specific point of time. And that point of time is 22nd of June, 2021. First level, 40K. Second level, 47.5. Third level, 56. And the fourth level was 66. So we would have hit 4 out of the 5 layers if we had that. And if you break your bag into 20% allocations, you sell 20% every time it hits, and that way you take profits. So let's look at the second one. This is ETH. We only hit 3 layers, but look how close it came to the 4th layer. It was super, super, super close, but just missed. But 3 layers aren't bad. The first one was 2,700. Then about 3,000, then 4,000, then it was 48.72. I think actually during the day, I can't remember the exact number, but it was touch and go. It may have actually breached it on certain exchanges as you go forward, but that'll be interesting to dig into if it did actually nail it on that day. Let me try pull up that exact number again. Is that 48.72? We'll see. Actually, I do have that number somewhere. Hold on a second. This will be interesting to dig into. Did I paste the... No, I didn't. Where did it go? I just have the percentages for the all-time high and distance from all-time high. The model, I didn't share the actual numbers. Anyway, that was ETH. So you would have got 3 of the 4 layers on the rampage it went on. Let's look at AAVE. AAVE hit only 2 layers. And there's an interesting theory behind this. It hit 295 and then 350. And at the time, our entry point was about, I think it was 175 or something. But we missed it. Now, what happened, if you look at the chart, you can see it went on a rampage before. And the model takes into account the previous volatility. And what I've noticed as well, in the last bull run, the legacy names ran first. The AAVEs, the Uniswaps, the Cardanos, etc. They all ran really hard, really early. And the more modern names ran later. So I don't know if history will repeat, but if it does, that's an interesting learning. Then we have the Solana layer out. It hit all 5 layers, but of course, the last layer, I think, was about 150 or 175. After that, it shot to 260 or something. So again, you would have been out, but then you would have to deal with the emotions of sitting there watching it go from, say, 170, 180, all the way up to 260. And that's the problem when things happen on such a rampage. People get, I got to get more. This thing is going to the moon. But again, with a system, with a model, it gets rid of that emotion and forces you to get out. In addition, next one is Chainlink. 3 layers were hit. Again, just like AAVE, it ran early, unlike the other names. So the legacy names ran first. The newer names ran second, which I think is interesting. But those 3 levels, again, 22, 26, 32, it didn't get up to 38. But again, this whole system is designed to be 80% efficient to nail layers, at least 4 of them, 80% of the time. Next is Polygon. MATIC, this has been on a rampage. It hit 4 layers. I remember when it hit $3. It's like, wow, that's incredible. And actually back in September 2021 is when I first built the Should I Sell MATIC and identified the layers to do that manually, of course. Now we have a system to do it. So it was $1.40, $1.72, $2.24, and $2.76. After that, we didn't hit the 5th layer. But again, the 5th layer is always a big stretch goal. Polkadot. It hit all 5 layers. Boom, 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 boom. And Algorand hit all 5 layers. Again, these are some of the new names that ran later, unlike the legacy names that ran first. Uniswap. See? Another example of a legacy player that ran first, didn't run during the main bull run. The money went to the new shiny things. It hit $25, it hit $30.40. It didn't hit 39, 47, or 53 above that. So that was sad. What else do we got? Cardano, layer out. 3 layers. were hit $1.80, $2.20, and $2.86, and it went all the way up to nearly $3.80. That was the maximum top for the model at that point in time. Of course, just got to about $3 and has been selling off ever since. And if anybody owns Cardano, it's very easy to determine the reason why it's selling off. Check on chain. So let's talk about the conclusion and what we can take away from this so we are smarter this time around. Again, hit the like, subscribe. If I get 2,000, I'll build a new retire on portfolio with elements of the existing. First conclusion, I always say keep your tap dancing shoes on. Don't get married to a token. Don't get married to an equity or any asset. Use it till it tops out, then bounce it. That's just so important. Take profit when you can. Second, crypto is risky. It's the Wild West. It's 98% corrupt. Big programs, projects dump on retail. Don't be in that bag. Be behind solid projects. Okay. Conclusion 3. This is kind of most important. And again, you know, people who put themselves out there like myself, you get a lot of stuff on YouTube. But what I believe we did well, we did okay on risk ranking. I thought that was pretty good, getting 4 out of the 5 that we thought were low risk. We did okay on allocations. We should have allocated more to the top 5 risk assets and more evenly, not all 82% on Bitcoin and ETH. That was a mistake. We did okay on some choices, and the Crypto Compendium crushed it. I went back and looked at all the Crypto Compendium scores for those 10 assets. The ones that performed the best had the best Crypto Compendium scores. There is a direct correlation to performance. Where we failed, we took too long to cut losers, and we failed not taking profit. Hence, the layer out model is there. Part 4, probably most important, is this next run, and we saw elements of it last run. It's out with legacy tech. The legacy stuff is not performing well, and the new stuff is. In with new tech, in with new narratives such as AI, etc., and in with new discipline. Leverage the models, focus on risk management, return, fundamentals, and profit taking. That is the most important thing if you play in this area. Next, the conclusion of the layer out results I thought was interesting to see if it was Pareto efficient. 3 hit all 5 layers. 2 hit all 4 layers. So over 50% hit the 80%. 3 hit 3 layers and only 2 hit only 2 layers. So again, you build everything to be Pareto efficient. The slight learning from the layer out model is certain assets run fast. Certain assets will shrivel up and die. That's very, very clear from the data I just shared with you all. See if you can discern which ones they are. And again, I'm just the delivery boy. I'm not the messenger. Sorry if any of your tokens were caught up in this, whether good or bad. It's just data. It's just numbers. It's models. It's not nothing personal. So with that, everybody, hope you like the show. Again, like it, subscribe. Let me know if you want that new one. And also, if you want me to calculate what the model generates in terms of return on investment versus hodling, because you hear a lot of people saying, oh, hodl is the best, you know, don't try time the market, etc. No, it's not. It's like just DCA. No, there's better ways. We've proven that. So I want to thank all the mods in the chat and everybody out there. Happy birthday. Somebody has a birthday out there too. Thank you, KH. Thank you, T&D. Thank you, DJ Glitch. Key man here. Huge helpers to the community. Thank you for all you do. I'll see you guys later if I can figure out how to get myself out of this. And for the 2,000 people that are out there, appreciate every one of you. And we're going to do much better with all the tools we have in the next bull run. And I'll be here to be there every step of the way with you all.